Holy crap, when you see the home flippers get burned, you know the peak of the real estate cycle is behind us. In this video, we've got to talk about massive breaking news about OpenDoor and how this affects the real estate cycle. Remember folks, when I got into the business as a real estate investor and realtor, which I've been now for over 10 years, I got started back in 2010, 2011, I first learned about the real estate cycle and being able to identify, oh wow, this feels like we're near the bottom of the market. That was back in 2011. It felt like the worst time to get started in real estate, but it ended up being the best. Well, let me tell you folks, the beginning of 2022 was probably, and will probably in hindsight prove to have been, the best time to sell and not get into real estate. Instead, now is the time to sit on the sidelines and wait and prepare. Now, let's get into some of the craziness that's happening. Just note, I'm also becoming a licensed financial advisor, though I can't give you financial advice. And I've got a large real estate startup called House Hack, and I sell a course on going from zero to millionaire in real estate. It's linked down below. There's a coupon that expires at the end of the month. And you can even learn about property management, being a real estate agent, you name it, some incredible content down there. Okay, folks. I've been warning about a real estate collapse since January, and so I personally sold 85% of my properties to prepare to buy the dip. And there's something you need to know about home flipping, which is what OpenDoor does. It's hard. Every single day you have a vacant property, you just take out your wallet, you take hundreds of dollars and throw them up in the air, and you hope to get more money back when you actually end up going to sell the property. But that only works when the market, folks, is doing this. When the market's going up, it doesn't really matter how long your frickin' flap and flip takes. In fact, I had a property in Santa Barbara that I waited 2 years for permits for on a remodel that I should have never gotten in. I bought the place for like $970,000. I sold it for about $200,000 more, and I did nothing to it. And that was in an appreciating market. I did that because I didn't have to do anything, but also it took forever to get permits. Again, that works in an appreciating market. Now, imagine the inverse though. Imagine the market's falling and you're waiting for permits and you're like, oh my gosh, I'm gonna go bankrupt here, right? Like every single day. Not only is it costing you money for insurance and property taxes and loans to hold the property, but the market's now falling out from under you. Then you really risk bankruptcy. So personally, I'm a low risk kind of person. I think flips are the worst thing in the world that you could consider doing going into a down market. In an up market, they're still risky, but at least you have some wind at your back. So I want you to think about OpenDoor, because OpenDoor just reported something, well, not directly OpenDoor, but a data analytics firm reported something that's kind of scary for good old, OpenDoor. And it kind of reminds us of what happened to Zillow. So Zillow in 2021 ended up shutting down their home flipping business. Now, they, fortunately for them, did so after losing nearly $1 billion in November of 2021, which was roughly the peak of the stock market and before the peak of the real estate market. They got out and they were able to sell their portfolio. Now, OpenDoor decided to stay in the business. They even partnered with Zillow to get leads. Well, unfortunately, OpenDoor is just straight up either stupid or they just don't pay attention to the macro market, which gave us so much writing on the wall that the real estate market was about to get screwed. And so what did they do? Instead of actually buying less homes at the beginning of the year when I started screaming, this is about to collapse, like here are the indicators, like it's getting started, get the F out, don't buy right now. While I'm saying that on the YouTube channel, what are they doing? They're buying. And they even give an explanation as to why they were buying. But first, some of the data. According to Yippit data via Bloomberg, OpenDoor is suffering bad. So much so that in August they lost money on 42% of the homes they were selling. And it gets worse when you zoom in. In Los Angeles, OpenDoor lost 55% lost money on 55% of their sales. That means on more than half of the homes they sold, they lost money. In Phoenix, they lost money on 76% of homes they sold. That means if you go on Zillow right now and you see an OpenDoor for sale sign, there is a 3 out of 4 chance in Phoenix, Arizona that they lost money. Both Los Angeles and Phoenix and the nation overall, of course, had substantial appreciation over the last 10 years. But that doesn't mean you buy in January to April at the top of the market. But OpenDoor had an excuse for this. They said, well, we didn't want to cancel contracts on our customers for a brand choice, because we wanted to make sure people didn't feel like we were, making them an offer and then not following through with it. Well, you have that right when you're a buyer, okay? But anyway, OpenDoor ended up doing some stupid stuff. According to Bloomberg, OpenDoor, and this particular anecdote here, this person whose name is Troy Reddy. It's one heck of a last name. Okay, ready for what, Troy? The crash? Ready to buy those real estate courses down below? Ready to join HouseHack? I don't know. Anyway, Troy Reddy apparently says he almost fell out of his chair when OpenDoor offered him $1.4 million and closed the deal at the end of March. OpenDoor then put the house back on the market 2 weeks later, asking just under $1.6 million, but then cut the price every 2 weeks before selling the property for $1.3 million in August. That looks like a $100,000 loss, but with all the fees, is probably more like a $200,000 to $250,000 loss. This is pretty ugly, and it wouldn't surprise me if OpenDoor ends up being one of those companies that just has to end up trying to raise money on the open market or issue more debt. It's a company that just ain't that good of a deal to be holding on to in the midst of a potential real estate catastrophe. Now, I'll show you exactly why, but first, this is their stock, okay? Even back in January, this stock had already fallen to about $10 from its peak of $25 post-SPAC era in November, which was Euphoria era. But even if you had shorted this back in January, you would have been up over 60% on your money just shorting OpenDoor. And honestly, there's a good chance this is gonna get worse, especially as the real estate market continues to deteriorate. And the reason I say that has to do with actual fundamentals. Take a look at this, folks. This is the OpenDoor income statement. It tells you how much money they're bringing in and how much money is going out. So using the data from May, June, and April, so April, May, June, which still had contracts, deals that were closing from the peak of the market, okay? So these numbers you see here are representative of the peak of the market. Profits coming in from escrows closing, escrows that occurred maybe in February and March and April, closing in this quarter here. The best and peak amount of income to expenses this company had looked something like this. Gross profit, $486 million. Total operating expenses, $454 million. Interest expense, $89 million. Net loss, $54 million. So basically, at the peak of the real estate market, they succeeded by losing $54 million, okay? Now the market's turning, and this is their balance sheet. This tells us how much money they actually have. They have $2.2 billion in cash, which I expect is absolutely going to get decimated by massive losses. If this company, and I can't guarantee this, okay, but if this company loses $500 million in this next quarter here, then they will probably be able to survive for about 4 quarters or about a year. But this real estate crisis isn't going to be over for a year. They're going to be losing lots of money. So everything about OpenDoor's survival is going to come down to how much money they lose. Now, you might say, oh, but they have this real estate inventory here of $6.6 billion. Sure, but if that's all upside down, it does you no good. Why? Does it do you no good? Because if you add together their debt, you're going to add together the current portion of their long-term debt, which is $3.3 billion, plus their long-term debt, which is about $3.2 billion. This works out to about $6.5 billion in debt, long-term and short-term debt for assets, for real estate that's worth about 6.6 last quarter. Well, if that gets a haircut to the tune of 20%, Now all of a sudden, you're looking at maybe having assets worth $5.4 billion. And what about the banks, maybe taking a haircut on their loans? Yeah, right. Nope. They want their full $6.5 billion. So in other words, now, not only are you going to get burned on a month-over-month basis in operating negative cash flows, but your debt is absolutely going to eat you up. Now, look, I can't advocate sitting here and saying, oh, you should, short a stock or whatever. I don't know if this stock is going to go to the moon tomorrow or it's going to drop like a rock. I'm not here to predict that because the short-term market is just insane. But what I will tell you is this is a horrible business to be in or at or near the top of the real estate cycle. Now, some folks are like, wait a minute, Kevin, aren't you starting a real estate company that can take deals from companies like OpenDoor? And how does that make you different? Yes, I am. But the most important thing is that HouseHack is planning to bottom feed. And that's why we're sitting on cash doing nothing with totally minimal expenses until it's time to buy. So first of all, we're different because we're not idiots buying at the top of the market. I've been screaming since January, don't buy, sell. And I rarely say sell. In fact, I think most individuals should never sell. I sold because I'm starting a startup and I needed capital for that. So I broke the piggy bank of my real estate to have capital for my startup. But we're also not flippers. We're the buy and hold type. It's not like we're trying to day trade real estate here where you have to suffer construction woes for 3 months and holding costs and escrow dramas. Real estate is hard. It's a headache. It's a people business. And if you can't handle working with people and you can't handle the drama of understanding what's going on in the market and real estate, you're going to get burned. Now, you can learn everything that I know about how to buy good deals, how to actually insulate yourself by buying wedge deals, and make sure that you have the greatest chance of success in building your wealth, but also becoming a millionaire by checking out the Zero to Millionaire Real Estate course linked down below. Take a look at that. Use the coupon code before September 30th. And folks, we'll see you in the next video. If you're an accredited investor and you're interested in investing in HouseHack, which will be a long-term rental company who will be able to buy these flips for better deals than what OpenDoor is buying, go to househack.com to learn more and read the prospectus, because this video is not a solicitation, so go to the website to read the prospectus. Thanks so much. Goodbye.